Hey guys, it's Wayne Scully here, owner of W Scully CPPC. I'm a tax and business strategist. My focus is providing solutions to landlords, flippers, and real estate pros in the New York tri-state area. My firm offers tax compliance, business consulting, and high-value tax plan strategies to save you thousands of dollars. Here at W Scully CPPC, we say taxing is their job and saving is ours, or we give you $100. So I want to touch on a topic real quick. It's been a while since I've been here and doing a video on YouTube, but I wanted to take an opportunity, since I'm not as busy as I was a couple of weeks ago, to start doing these videos again. Today I want to talk about high income earners and what the IRS is doing to collect money from those people. Now, the IRS considers anyone making $100,000 or more a high income earner. Now, depending on where you are, that may or may not be true, but the fact is that's their rule. So there are probably a lot of people that are out there that have made the IRS's dirty dozen list of tax scams, and high income earners who don't file their tax returns made that list for 2022, or at least so far anyway. And so if basically the IRS is pursuing those people aggressively to collect taxes from them, and they need to be aware that failure to not file their taxes timely, it has severe consequences. Okay? So if you have a requirement to file, I'm not saying that everyone who makes over $100,000 has a requirement to file, but most likely you do. You at least have to file. You may not owe any taxes, but you at least should file. You're way over the standard deduction for pretty much all the filing statuses, from single to head of household to married to qualifying widower or widow. So it would behoove you to file that return, and even just from a compliance standpoint, to make sure that your returns are set and the IRS won't come after you. One of the big things the IRS may do is file what's called an SFR, substitute for return, which means that they file the return without regard to any credits or deductions that you may qualify for, and they just send you a bill. Okay, so you don't want that to happen, because if that bill becomes final, if you will, if it goes from proposed to final, then you're definitely gonna be hit with the interest and penalties that go along with that big tax bill. So you don't want to do that. So it would behoove you to definitely file your returns timely, and so you don't have to deal with that SFR situation. Now, if that doesn't happen, as time is elapsing and you have not filed that return, the IRS will then, once you do file a return at some point in time, the IRS will then slap you with a failure to file penalty. Failure to file penalty. And that failure to file penalty is pretty excessive. Yeah, it's a pretty big percentage, 5%. So you get to pay 5% on the balance that's owed in taxes, and on top of the tax itself, you get hit with a 5% penalty on the balance that you owe. And on top of that, you get to pay interest on the penalties that you owe. So it's not a very pretty situation to be in. So you definitely want to file, like I said before, file returns. I can't state enough, file returns and file it timely. The other thing you want to know is that the penalties for paying late, see, it's okay to file the return. If you file the return and you can't pay, you can make arrangements to pay. And the penalty for the unpaid balance is 0.5%, 0.5% versus 5%. So it's always better to file the return, have it filed timely, to avoid the penalty to the failure to file penalty, as opposed to the failure to pay penalty, which is only a fraction of the penalty for failing to file the return. So Folks, if you have to deal with both penalties, the maximum is 5, generally speaking, but the penalties could go up to 25%. All right, so the penalties could go up to 25% based on whatever you owe on that return. Now, it gets worse because if the failure to file is deemed fraudulent, then the IRS could actually jack up the penalty between 25 and 75%. Hear me, folks, between 25 and 75%. So you definitely don't want to be in a scenario where you're deemed to have failed to file because of some fraudulent situation. So there you go, folks. It's Wayne Scully with W. Scully CPAPC. Where taxing is their job, saving is ours, or we give you $100. It's been a pleasure giving you this nugget or these nuggets of information today. Please like, share, and subscribe to my channel. Like the video, share the video, and subscribe to the channel. I appreciate that very much. And I look forward to other conversations with you. You take care for now, and thank you. Bye-bye.